Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News EN channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Ethereum exchange reserves plummet to 9-year low. Is a supply shock incoming? Howard Lutnick confirmed as U.S. Commerce Secretary. What does it mean for crypto and trade policy? Norway indicts for individuals in $80 million crypto fraud case. How deep does the scheme go? Hong Kong reaffirms commitment to crypto innovation as AI and blockchain converge. BitGo CEO, public listings are essential for crypto's Wall Street adoption. Ethereum exchange reserves plummet to 9-year low. Is a supply shock incoming? Ethereum's exchange reserves have reached their lowest level in nearly 9 years, signaling a potential supply shock that could fuel a price rally. With fewer ETH tokens available for trading, investors speculate whether this marks the beginning of a bullish surge toward the $3,000 psychological resistance level. Ethereum reserves hit 18.95 million, lowest since 2016. According to CryptoQuant, the total ETH reserves across centralized exchanges have dropped to 18.95 million ETH, a level not seen since July 2016, when Ethereum was trading at just $14. This decline in available supply comes amid growing self-custody trends and staking demand, reducing the amount of ETH available for immediate sale. Historically, lower exchange reserves correlate with reduced sell-side pressure, potentially setting the stage for a strong price rally. We are seeing similar trends for BTC, which makes me think that demand is now outpacing supply, said Nikolai Sondergaard, research analyst at Nansen. This shift toward cold storage and self-custody is generally bullish for Ethereum. ETH price struggles despite shrinking supply. Despite the bullish fundamentals, Ethereum's price action has remained weak. Year-to-date, YTD, performance, minus 19%. Year-over-year, YOY, performance, minus 3.67%. Current ETH price, $2,698. Ethereum has failed to break through its $2,750 and $2,800 resistance levels, facing repeated rejection in recent weeks. However, analysts believe a breakout above $2,800 could trigger a massive liquidation of leveraged short positions, with over $822 million worth of short liquidations at stake, according to CoinGlass. Potential catalysts for an Ethereum rally. Institutional demand via Ethereum ETFs. A major catalyst for Ethereum's price could be the potential approval of staking ETFs. The introduction of staking ETFs could be a game-changer, tightening Ethereum's liquid supply and reinforcing its value proposition, said Marcin Kosmichak, co-founder at Redstone. If Ethereum ETF issuers receive regulatory approval to integrate staking rewards, it could further reduce the available ETH supply, creating additional buying pressure. Growing adoption of Ethereum Layer 2 networks. Ethereum's ecosystem continues to expand, with Layer 2 networks like Arbitrum and Optimism witnessing record high activity. This surge in DeFi and NFT transactions increases demand for ETH gas fees, further strengthening Ethereum's long-term fundamentals. Will Ethereum finally break $3,000? With exchange reserves at a multi-year low, institutional demand rising, and staking ETFs on the horizon, is Ethereum on the verge of a supply-driven rally? Or will macro factors and market volatility continue to suppress its price action? Howard Lutnick confirmed as U.S. Commerce Secretary. What does it mean for crypto and trade policy? The U.S. Senate has officially confirmed Howard Lutnick as the 41st Secretary of Commerce, marking a significant shift in economic policy and cryptocurrency regulation under President Donald Trump's administration. Lutnick, a Wall Street billionaire and former CEO of Cantor Fitzgerald, has long been an advocate for Bitcoin and stablecoins, making his appointment a notable development for the crypto industry. Lutnick's role in Trump's trade strategy. Lutnick will now lead the U.S. Department of Commerce, overseeing 50,000 staff members responsible for managing business data, patents, and foreign trade relations. He will also work closely with top U.S. trade negotiators to execute Trump's aggressive tariff policies, including 10% tariffs on Chinese imports, already implemented. Increased tariffs on steel and aluminum. Potential 25% tariffs on Canadian and Mexican goods, decision expected in March. During his Senate confirmation hearing, Lutnick dismissed concerns that tariffs would lead to inflation, calling such claims nonsense. He emphasized Trump's goal of establishing more reciprocity, fairness, and respect in global trade. Lutnick's ties to crypto, a game changer for regulation. Lutnick's background in financial markets and crypto investments is a major talking point in his appointment. His former firm, Cantor Fitzgerald, is a key banking partner for Tether, USDT, the world's largest stablecoin issuer. Cantor Fitzgerald managed Tether's reserves, which grew from $134 billion in November to over $141.7 billion today. Lutnick has expressed strong support for Bitcoin, citing its halving cycles and decentralized nature as key reasons for its long-term value. However, his crypto connections have sparked controversy. Senator Elizabeth Warren raised concerns about Lutnick's deep personal ties to Tether, arguing that he would have extraordinary access to Trump and key regulators, potentially influencing stablecoin oversight in the U.S. To address these concerns, Lutnick has pledged to sell all 818 of his private investments within 90 days, a process that will be completed by May 19. What's next? Will Lutnick's leadership impact crypto regulation? With Lutnick at the helm, the Commerce Department could play a larger role in shaping U.S. crypto policy, particularly regarding stablecoins, Bitcoin ETFs, and financial regulations. Will his appointment lead to a friendlier regulatory environment for crypto businesses? How will his trade policies affect global markets and the U.S. economy? Norway indicts for individuals in $80 million crypto fraud case. How deep does the scheme go? Norwegian authorities have formally charged for men in connection with an $80 million cryptocurrency fraud scheme, accusing them of misleading thousands of investors and laundering illicit funds through a Norwegian law firm and multiple international accounts. The alleged crypto fraud. What happened? The National Authority for Investigation and Prosecution of Economic and Environmental Crime, COCRIM, released a statement on February 16, revealing details about the complex financial fraud. Over 900 million Norwegian kroner, $80 million, raised from investors worldwide. Victims were promised high returns from investments in gas, mining, and real estate. Investors were unknowingly part of a Ponzi-like structure where new funds paid earlier investors. No substantial investments were ever made. Cockrum State Prosecutor Joachim Ziesler-Berger described the case as large and extensive fraud, with victims from multiple countries losing significant amounts of money. We believe this is a large-scale international fraud case where a vast number of people have lost their savings. Significant sums have ultimately ended up in the hands of the defendants. How was the money laundered? Authorities allege that over 700 million Norwegian kroner, $62 million, from the fraudulent scheme was laundered through a Norwegian law firm and various company accounts across Asia. Cockrum investigators noted that the use of client accounts, shell companies, and international transactions significantly complicated the process of tracing the stolen funds. Who are the accused? The Norwegian Broadcasting Corporation, NRK, reported that the four accused men are between their 50s and 70s and operated the fraudulent scheme between 2015 and 2018. 3 men are charged with collecting funds from investors. 1 man is accused of facilitating money laundering. Defense lawyers for 2 of the accused have already denied their clients' involvement. Attorney Christian Fleming Johansson, representing one of the defendants, stated, "My client refutes all allegations and denies any role in this scheme." Lawyer Ole Petter Drevland, defending another accused, also claimed his client was not criminally responsible for the fraudulent operation. When will the case go to trial? The case is set to go before the Oslo District Court in September and is expected to last over 60 days. Will Norwegian prosecutors uncover the full extent of this international crypto fraud? Hong Kong reaffirms commitment to crypto innovation as AI and blockchain converge. Hong Kong is strengthening its position as a leading global crypto hub, with Financial Secretary Paul Chan Mo-po reaffirming the region's commitment to maintaining an open, stable, and dynamic market for digital assets. Hong Kong's vision for crypto and Web3 growth. During his keynote address at Consensus 2025, Chan emphasized that Hong Kong will continue to invest heavily in blockchain infrastructure, fintech, and talent development to solidify its role as a financial innovation center. Cyberport Web3 Hub now hosts over 270 blockchain firms, adding more than 120 companies in the past 17 months. Universities and industry partnerships are training a new generation of blockchain experts. New regulatory frameworks aim to support sustainable Web3 growth. The key to success lies in maintaining an open, fair, balanced, and forward-looking regulatory approach that fosters sustainable financial innovation, Chan stated. Crypto licensing and regulatory advancements. Despite Hong Kong's ambition to become a major digital asset hub, its Securities and Futures Commission, SFC, has been selective in issuing operational licenses. Only 9 crypto exchanges have received licenses since the regulatory push began last year. PantherTrade and YAX became the latest recipients in January 2025. Proposed tax exemptions for crypto gains could further attract hedge funds and private equity firms. The future of AI and blockchain in Hong Kong's financial ecosystem. One of the most anticipated developments in Hong Kong's fintech sector is the intersection of artificial intelligence, AI, and blockchain technology. Chan highlighted that AI's growing role in finance presents both new opportunities and regulatory challenges, stating, AI is evolving rapidly and being increasingly integrated into financial services. Its convergence with blockchain will unlock new use cases, while also requiring clear oversight. To prepare for this, Hong Kong's Financial Services and Treasury Bureau, FSTB, introduced a dual-track policy for AI adoption in finance in October 2024. Can Hong Kong's proactive regulatory approach drive its ambitions to become the global leader in blockchain and AI-powered financial services? BitGo CEO, public listings are essential for crypto's Wall Street adoption. As the cryptocurrency industry matures, going public is becoming a crucial step for firms looking to establish trust and credibility among traditional financial institutions. According to BitGo CEO Mike Belch, publicly traded crypto firms will play a key role in bridging the gap between digital assets and Wall Street. Going public, a new era for crypto trust. Speaking at Consensus Hong Kong 2025, Belch emphasized that crypto firms must embrace public markets to gain the trust of traditional finance players. Public companies are subject to greater regulatory scrutiny, which increases transparency and credibility. Wall Street firms have struggled to trust private crypto companies, citing the collapse of FTX as a prime example. The SEC's oversight ensures due diligence, a key factor in mainstream financial adoption. To address Wall Street, you'll need to be a public company. Regulation, transparency, and trust will be essential moving forward, Belch stated. Will BitGo and Bullish go public? While BitGo has not officially confirmed an initial public offering, IPO, Belch hinted at the possibility of going public later this year. Similarly, Bullish CEO Tom Farley, who also spoke at the event, agreed that a public listing would bring much-needed transparency to the crypto space. A listing on a well-respected market shows your willingness to be transparent about financials. That kind of confidence is crucial, Farley explained. While neither executive confirmed IPO timelines, their comments suggest crypto firms are increasingly considering public offerings to gain regulatory approval and mainstream financial legitimacy. Crypto regulation under Trump, a positive shift. Both Belch and Farley also weighed in on the changing regulatory landscape, noting that the industry has seen favorable shifts under President Donald Trump's administration. The Republican-controlled Congress is expected to introduce pro-crypto policies. New appointments at the SEC and CFTC could lead to a friendlier regulatory environment. Long-term policy shifts are still required, but industry leaders see major improvements ahead. The regulators are ready to make big changes. It won't happen overnight, but the landscape is shifting, Belch added. Could a wave of public listings redefine trust and transparency in the crypto industry?